Good evening, everyone. My name is Carisha Devlin, and I'm co-CEO of Annie's Project. And I'd like to welcome you all to In Plain Talk, Crop and Livestock Insurance and Risk Management Strategies webinar series. Tonight's topic is record keeping in crop insurance, and it's brought to you by the USDA Risk Management Agency and Annie's Project through award number RMA 23 CPT 00131617. And just a quick background about Annie's Project. Annie's Project is a 501c3 organization, and our mission is to empower women in agriculture to be successful through education, networks, and resources. And even though we have women in our mission statement, we are open to all, to anyone who is interested in learning more, improving, increasing their skills, and being a better overall operator of their agricultural business. So just a quick kind of tips for tonight. For those of you that may have not been on webinars before, the way we're going to work as far as questions, we ask you to use the chat feature or the Q&A feature, which is located at the bottom of your screen. So again, we welcome you and look forward to spending the next hour with you. Now I'd like to turn it over to my counterpart, Doris Mold.
Good evening. I'm Doris Mold, the other co-CEO of the team here. Pleased to be with you this evening, and we really appreciate the support of RMA to help us put on this series. I'd like to introduce Heather Dufault. Heather is not only one of our presenters in our webinar series, but she has also been a key member of the team putting together this whole educational series. And we'd like to thank Heather for not only doing the webinar tonight, but for helping us out and being a key person. And you'll soon find out why as to why she has been a key member of that team. Currently, Heather serves as a local extension educator with the University of Minnesota Extension. She has also been an Annie's Project facilitator and has facilitated 7 Annie's Project 101 sessions. And before she started with Extension, she was a crop insurance agent for 20 years, working with a book of business of an estimated $1.5 million. Heather grew up on a dairy farm in South Central Minnesota, went to college at the University of Minnesota Crookston, earning an associate's degree in dairy science and a bachelor's degree in ag business sales and management. She and her husband currently farm about 1,000 acres on the family's generational farm, being the 6th generation. They grow wheat, corn, soybeans, and sugar beets. They have 3 children, 2 grown and living on their own, and 1 still in high school. Their oldest son is farming with them, making the 7th generation on the farm. So as you've just heard, she has a wealth of experience in not only crop insurance, but also that practical experience of being the producer, purchasing crop insurance as well. So would you give a warm welcome to Heather Dufault? And Heather, we'll look forward to hearing from you now.
Thank you, Doris. It's humbling always to hear that bio. As you write it, you don't think about that, but then when you hear it back to you, it's humbling. So thank you for that, and thank you for allowing me to work on this project with you guys. I think it's very important as we move forward. So we're gonna just kind of dive in right away. We're gonna talk about our record keeping and our crop insurance and how we work those together. So first of all, I just want to have a little bit of a risk discussion. We face risk every day in everything that we do. We have production risk, we have financial risk, we have legal risk and human risk, we have marketing risk. We put ourselves out there every day. So how do we avoid that, or how do we mitigate it? So we can't really avoid it, although we might try. But we do want to try to mitigate it. There's ways we can reduce risk. We self-insure ourselves a little bit. And the biggest way that we mitigate risk especially a farm operation, is we transfer some of that to insurance companies. We do that in our personal lives. We buy auto insurance, we buy homeowners insurance. So we're mitigating risk every day. Oh, I went backwards. Sorry about that. So what I also want to dive in and talk about a little bit is what are records and why do we need to keep them? An average Joe on the street probably doesn't do much for keeping records, but maybe balance their checkbook. But having records gives us the ability to answer questions, especially when we're in a business or a farm operation. On should we expand our business, or can we move forward to next year, or how many families can we support on the farm that we have? Record keeping gives us the ability to track our inputs and outputs. We record the when, the where, the why, the what, and the how much. So it gives us that money picture that we're looking for. Financial records help us do taxes. They are a way to help us accurately know our financial position. And did we make a profit or did we not make a profit? There's several different types of records that we look at when we're working with a business. So we're going to briefly touch on accounting, production, marketing, a little bit of family living, and why we look at that financial analysis. Accounting records, there are two types of accounting records. Both are very important for different reasons. Tax records help us give information for filing our tax purposes. While the accrual method of accounting gives us that health checkup, it has that more in-depth look as to the total costs of production and break-evens. And we also look at accounting records on a business side and then also as an individual or a family. We can keep records on both sides because both of those are important to know where our full financial place, and it's kind of like a health checkup, so it gives us that place. Production records are basically what it just implies. It's keeping track of production, how many acres are planted, how many acres are harvested, how much was harvested. Typically, harvest is recorded on a per acre basis. If you're a small production farmer, it might be on how many pumpkins were sold or how many pounds of lettuce were taken off the field or things like that. If you're in livestock, it might be how many head of livestock do you have, how many head of livestock passed away or died in the last year. So you have that mortality rate. So there's lots of different ways that we can look at production records, but the biggest thing is it answers the physical production information of the how much and the how many. Marketing records tells us what is sold or what did we get a price for. Were there contracts that we filled and we hauled grain into the elevator and we got a futures price, or were the cattle sold at a local sale barn, or were they sold to a private treaty? Farmers markets, what did you sell? What was premium? What was bulk rate? What was discarded? Did you have a CSA or did you have farm stands? So marketing records is the money side. How much did you bring in and how much do you have contracted out maybe? Family living is basically that detailed household record of that off-farm income. That includes, information like what is the healthcare insurance costs, what are your utilities costs, and then also do we look at family living because are there any shared expenses that you have between your farm and your household that you can split? Sometimes, typically, we see utilities are split, or do you have a home office? Like tonight, I'm sitting in my home office. Can we split some of our home office expenses due to we use it for our farm and for our household? So we want to make sure we have that detailed household budget to go along with our record keeping. How do we get started? We get started by tracking our checking accounts. We want to track our commodity sale invoices. We want to track our production expense receipts. Do we have any loans on things? We want those loan statements. Credit card statements are very important because a lot of people pay their expenses with their credit cards, and a lot of those expenses can be they could be farm expenses. So we don't want to discount those credit card statements. We want to split those apart and make sure that we're marking what's an expense and what's a personal expense. We also want to make sure that we're having planning sessions with our bankers and our tax accountants, because those people become part of our family as we get going into a farm operation. Those planning sessions will also mean that we work on cash flow statements and balance sheets. We need to do this and we do this on a timeline. We want to keep up with doing our record keeping. We want to do that once a month, do it once a week. We want to be consistent. We don't want to have to do 7, 8, 9 months of record keeping the night before we go meet with the tax accountant or the banker, because we don't want to have all that stress put on us at one time. So we do our record keeping consistently throughout the year so that we have a better picture moving throughout the year of where we're at any point in given time. This is just a few options. We're not limited to these options because there's also building your own spreadsheets. So some of these are the Quicken or the QuickBooks, the Red Wing software. There's other softwares out there as well. Personally, for us, we do have an accountant that we hire to do our software, and they use the Red Wing software for agriculture. So our stuff is all we get it back to us, and it's all like detailed out. But we are telling the accountant what account those things are for, and so she's putting those in the right spots. And so it's building a relationship with an accountant, as well as maybe your banker and your tax preparer, because using those are crucial to making sure you have a good record keeping system. There is also another software that I'm actually looking at personally. It's an app that goes on the phone, as well as a software. It's called Ambrook. And some may have heard of it, and I'm seeing ads for it, so I'm looking into it. But it looks kind of promising, especially when you're looking at getting a young person started in the farm operation, or just getting started on your own. You need to make sure you're tracking your expenses and finding good ways and easy ways in today's technology to do that. So now that you kind of know what records are, why we need to keep them, what do you do now? They're going to help us with our tax preparation. Those records are going to help us make those management decisions. And if we keep up with doing those records every day, every month, every week, whatever it may be for you, they can help us look at that business as a whole at any point in time, and helps us plan that year. Having records also helps us ask that hard question: can I farm next year, or can I have this food stand or this farm stand out on a farmer's market this next year? Do I have enough to get it going, or can this farm move to the next generation? So it's helping us answer some of those really, really hard questions that can come about. Knowing your profitability is a huge question that comes about. So by having those records and knowing what your profitability is and having that accurate information to do that, that is a key. So we're going to move now into the next part of what is insurance. And so Doris and Krisha, if there's any questions in the chat box or anything that need to be answered, just let me know. but otherwise I'll just kind of keep right on a moving here. We're going to talk a little bit about insurance now. So what is insurance? So the Cambridge Dictionary defines insurance as an agreement in which you pay a company money and they pay your costs if you have an accident or an injury. So what does that mean? What does that insurance do then? It guarantees a compensation for a specified loss or an illness or a death. So you have different insurances like homeowners, life insurance, crop insurance, health insurance. You have travel insurance. There have auto insurance. So by purchasing insurance, it's giving you a financial safety net to help you recover from something faster. It also is transferring some of your risk to somebody else or to another company for a price. So you're paying a premium for that. As we think of our normal day-to-day life, the old-fashioned American dream was owning a home. We wouldn't go without homeowners insurance. In today's world, we probably wouldn't go without health insurance. So we want to make sure that we're having that's what insurance is. We wouldn't drive a vehicle without having that auto insurance. So we're transferring our risk to the insurance company for a price that becomes our safety net. So with all of that definition of general insurance being said, we're going to move into a brief introduction of crop insurance. And just understand as we go through these next few slides, this is just an introduction to crop insurance, and that further in-depth information on what crop insurance can do for somebody will be given in our online course that's coming up in March. So we're going to move into crop insurance. Multi-peril crop insurance is a product of the United States Department of Agriculture. So that today, as we know, our crop insurance, multi-peril crop insurance, it began actually in the 1980s. So this slide is just a visual of what we want to kind of go through. And the United States Department of Ag is the overarching body that is managing the risk management agency. The risk management agency is the policy writing place. They're developing the policies. They work with approved insurance providers who then work with agencies and adjusters. And then those agencies and adjusters work with us as producers to build the whole crop insurance tree. So risk management agencies' role in this federal and private partnership, which crop insurance is a part of. Crop insurance is a part of the Farm Bill legislation. So it's a small part, but it's a very important part of the Farm Bill legislation. So with that private federal partnership that we have with the crop insurance risk management agency, or as RMA, as you might hear me say down the line, they manage the Federal Crop Insurance Corporation. They oversee the product development of the policy and maintain those existing policies. Risk management agency backs up the approved insurance providers who share the risks associated with selling policies. And RMA also provides guidelines for the administration of the policy. And the biggest thing is RMA is also involved in investigating the program itself, making sure it's always that it's not losing money. So they're always looking at fraud, and they're looking at waste. They're looking at loss adjustment. They're looking at changes to the policy. They're looking at different things that can help make that policy better. The approved insurance provider's role is the approved insurance provider is your company that you will actually, as a producer, that you end up buying your insurance through. You work through the agents and the agencies, excuse me, to do that, but they are called the approved insurance provider. They are the ones that train and hire the adjusters and the auditors. They share with RMA any underwriting gains and losses, and they also share that with the agents and the agencies. Those AIPs will invest in the technology that they need to get all the claim work and policy work done. They follow RMA for guidelines, and they organize their own reinsurance to protect themselves as well on financial risks. The agent and agency role is to assist the policyholder with sales and services of the policy. The agencies receive compensation through the approved insurance provider, and the agency is the point of contact between the approved insurance provider and the producer if there's any claims that are turned in. So there's very important roles for each of those pieces. But the three things that we need to know about the crop insurance as a federal private partnership is policy is made by risk management agency. The AIP, or the approved insurance provider, is the policy enforcer, and the agency role is the sale of the policy to the producer. So what we're looking at is building a relationship with an agent or an agency to provide us with the best information possible. Multi-peril covers a lot of things. They are a federally subsidized insurance policy. You also have to be in compliance with the Farm Service Agency in order to receive that subsidy. Multi-peril coverage provides a broad coverage for naturally occurring causes of loss, and some of those causes could be adverse weather, insect damage, earthquakes, or volcanoes. There is no coverage on the policy for human-made causes of loss, which would be a spray drift or a combine fire or the neighbor's cows getting into your crops. Those are human-made causes of loss. There are different types of insurance available under the multi-peril crop insurance umbrella. We have revenue coverage, there's production coverage, there's whole farm and micro coverages available. So those are all things that we'll kind of hopefully dive in deeper in our online course. So we're just touching on tonight what's available. There's also products out here that are not federally subsidized. Those are called private insurance products. They are crop hail insurance, which is another policy that you can have on top of a multi-peril crop insurance policy. That policy is going to cover information like hail that is specific to hail damage, and then they include some vandalism and malicious mischief into that policy, as well as transit coverage. A named peril will also work as it's a non-federal subsidized policy. Some of those policies work in conjunction with multi-peril. There are some of those kind of policies that also work in conjunction with some of your choices that you have to make at Farm Service Agency for program availability. So if you need crop insurance, where do you begin? So we're going to kind of talk a little bit about what do you look for in an agent what's the paperwork that's involved, and what's the cycle of a crop insurance policy. So what are you gonna look for in an agent? Excuse me. You want somebody that fits what your values and goals are. You want them to have knowledge of all of the products that are available. You want understanding of those. You want that person to have understanding of the products and the ability to get answers to your questions. They might not have it right off the tip of their tongue, but if they can get back to you in a reasonable amount of time with an answer to your question. You want that value relationship with that agent. You want that person to have an understanding of your operation. You want him or her to understand your operations needs as well. You want that agent to be available to you. You want, when something catastrophic happens, you need to be able to call that person at whatever time of the day it is. You need that immediate responsiveness, and because you need to talk to somebody. So you want that availability. You also want that agent to align with an approved insurance provider that will meet all of your needs. There are several approved insurance providers, and typically an agency will have contracts with several crop insurance providers or approved providers, so they can place you with the company that would align with your needs very easily and have the products that you need. The underlying thing with all of this is that communication is key. You want to be able to communicate freely between your agent and yourself. You want that fit. You want to know who you have on your side.
So Heather,
Yes.
somebody who might not be as familiar with crop insurance as you are, um, when you talk about what you should look for in an agent, can one agent give you a better deal than another as far as price and things? Or how does that enter into things? Or
Good question, Doris.
how does that all work?
That's a really good question. When you're working with a crop insurance policy, and that policy itself should be the same price with any agent that you go to. So the federal policy, the federal multi-peril crop insurance policy, should be the same price with the same options, no matter which agent you go to. What you want to look for is that agent that knows exactly what you need as far as putting an additional option on the policy, or how they're going to service that policy instead of what that price is. Does that answer the question?
Yes, it does. But I just wanted, people to
Yes.
understand that, you've got this whole list and it's like, well, can I get a better price from somebody? But you can't really. Right. It's these other factors that you need to look at to see who's going to best meet my needs as far as a provider. Thank you.
Exactly. Thank you for that question and that reminder for myself too, because yes, once you've been in it for a long time, you kind of forget. You gotta step back and you gotta look at it. And yes, so crop insurance, multi-peril crop insurance, the federally subsidized policies are the same price no matter which agent or company that you go to. So with that being said, it really does become a service oriented policy. So these items under what you should look for in an agent become very, very important. And I think the biggest one for me is having that relationship with your agent, and that agent that knows what your operation is, that he's going to give you a policy that fits what you want and not fits what he wants, because he gets compensated for the policy, or she gets compensated for the policy, so they could upsell your policy and make you buy higher levels of coverage or something that you may not need. So having that relationship with an agent that knows you, that knows your operation and knows your need and communicates with you, that is the biggest key. Along with picking an agent, there's a lot of paperwork, especially when it comes to a government subsidized program. There's a lot of paperwork that goes along with it. There's applications, there's the crop provisions, you have a production report that you need to fill out, you have an acreage report that you need to get submitted, and then you also have a schedule of insurance. And so what is all of that? So let's kind of break that down just a little bit, and let's talk about each of those. The application is basically what an application is for anything. It gives you the personal information, your tax ID, your entity, if you're a partnership with a brother or a son, or if you're an S corp, or if you're whatever your entity is, it takes all of that information. It's gonna have the crops that you want to produce, and maybe you have a share in somebody else's crop. Maybe it's a father and a son policy that is the dad is taking 75% of the crop and the son is taking 25% of the crop. Those kind of policies exist. The application is also going to tell you some coverage levels and options that might be on your policy. So it's going to show you your product that you're going to choose. Are you going to have a revenue product or a production product? The level of coverage that you're going to choose that fits the farm. It's going to show you the options and your insured entity. What are provisions? What are crop provisions? Crop provisions is the paperwork that it explains the policy in itself, and it gives us an order of operations. And typically you'll have crop provisions for each crop. So you're going to be getting a lot of mail on a crop insurance policy. There's, whether it's snail mail or whether it's email, there's a lot of paperwork that goes in with that. And the policy itself can be extensive, but that's also why you want to make sure you have an agent that you can work with so that they can talk you through the crop provisions as well. So again, the crop provisions are just the guidelines for the policy for that particular crop. And so you may get multiple crop provisions.
So what does it mean by order of operations? What is that referring to?
An order of operation would be you would have to, in order to have a claim paid, you have to submit your claim in a timely fashion, and they have to have the adjuster out, and then they'll fill the paperwork out, and then they'll send out the claim. An order of operations might be you may need to make sure that you meet the deadlines. There's a deadline for the application policy part of the policy. There's a deadline for the production part of the policy. So it lays out the operation, the deadlines, the order of operations. You're going to want to fill out an acreage report, and that acreage report will give us your planted acres, what kind of soybeans did you plant? Are they edible? Are they feed grade soybeans? Are they organic soybeans? Are they oil soybeans? You're going to want to know planting dates and practices. And practices could be the irrigated practice or a non-irrigated practice. this information that you do in the acreage report is all of this is in detail. A lot of times agents will give you a map to fill out that you can put in. Okay, I planted soybeans on this field on this day. And when you actually plant your crop is the day that the policy attaches to it. So the acreage report is the formal establishment for the liability of the policy that you're putting together. You also give that information to the Farm Service Agency because they record the same information, and the data is shared between Farm Service Agency and the multi-peril crop insurance. So they are comparing that data always to make sure that everything is where it's supposed to be. So once you've completed a schedule of insurance, or excuse me, an acreage report, that generates the schedule of insurance. The schedule of insurance tells you everything that you reported as far as what your crop level was going to be, which was on your application. It tells you where that crop was planted. So it tells you how much liability you have out there for that particular crop. It tells you what the premium is for that particular crop or that field. So your schedule of insurance generates the premium billing. So that leads us to this cycle. So I kind of just went through all of this, the application process, and that has a sales, they call it a sales closing date, which I hadn't mentioned that before. So typically for a spring crop like a wheat crop or a corn crop or a soybean crop, you sign up for coverage in March in the central part of the United States. Each part of this United States is going to have a little bit of a different date. They may vary from location to crops that are available. But once you complete that application, you have the ability to report your acreage and your production, so that goes into your acreage reporting for the current year. You plant your crop and you report that to FSA, to your crop insurance, and then that generates the billing. And then after billing and harvest is done, then the insurance period ends and we start all over again in the beginning. How does this keep how does this put us together with record keeping? So what I want to point out here is at application time, you need your records so that you can decide what crops are going to be planted for the year and what coverages you want to have. When it comes to production reporting, you're going to have to know your cropping history and your yield history, so that helps build your policy. And we'll get into that when we go through our online course in a little bit more depth of what building that production history looks like. That history goes forward to giving your coverages that you'll have on your crop. And then your acreage reporting, you're giving the planting date, you're giving the amount of acres planted. So those are all records that go into your record keeping side of things. Once the premiums are generated, those numbers, those dollar numbers, go into figuring out how much you might need to market your grain for. So they go into a break-even price, or they help you mitigate some of those risks when you can market based on your marketing break-even price. Krisha, did you have a question that popped in?
Yes, there are two questions that have popped in. The first one is, are there any software applications or apps that allow an upload of the acreage reporting from precision planning field data?
That is a really good question. I think they're working on it. I don't know where exactly if they have gotten that running. That's been a question we've been trying to answer for a long time. So I don't know if they have now the interface that is a lot, if they found a good interface for that. So that would be a question that we'd have to dig into a little bit more and talk to the approved insurance providers and find out if there's any of that software available.
And the second question is, how many years of reports do I need before I can purchase crop insurance?
Typically they you can do it with 1 year. You might get assigned some yields or history, but as you keep growing that particular crop, that will add to your coverage. And some of that information it's really hard to talk about and without showing some pictures of what exactly happens when we add production to it. And so we'll get into that in our online course. But really, you will need to have at least 1 year of history. The insurance companies like to see at least sometimes 3 years, especially if it's a new crop or a specialty crop. But you can do it with just 1 year of history for sure. So we're almost done. I'm just going to kind of tie everything together here. Hopefully I didn't go too fast for everybody. We want to make sure that our record keeping is going hand in hand with our crop insurance decisions. So by keeping those records, it helps us make crop insurance decisions such as some of our crop break-even pricing and our cost of production. Those help us understand where our coverage levels will need to be. And then having our history of our production records, that helps us build a database for the crop history. The tax information will be used in the cases of some special crops for the whole farm coverage or the micro farm coverages. Tax information is used for that. It gives us a peace of mind knowing we have actual documentation behind our decisions, and we're not making those scientific wild guesses that can happen out there. It's when I went through and met with all of my farmers when I was selling the crop insurance policies, I always ask the farmers, what's your cost of production? You want to make sure that your policy is covering at least your cost of production, so that gives you the ability to farm another year. So we just want to make sure that we're doing what is needed for the operation. A lot of times people would come in with different forms of records, and so then I've seen people come in with shoe boxes full of receipts, or 5-gallon pails full of receipts, and then they want people to put that together for them. So by being consistent with our record keeping it up, that helps us give the information to our agents that shows where the position of our farm is at, so that we can accurately cover our product that we're growing in the ground, and gives us the ability to have that peace of mind, like I said earlier, so that we can continue growing our crops. That is what I have, Doris and Krisha. This is my contact information. And yes, I do apologize ahead of time. Sometimes I try, it's so easy to talk the broad the details without going into the weeds and making everybody all confused. So I hope I cleared it a little bit. Clear as mud, right? We always say.
So you got a thank you. It was great. And just to
Thank
let
you.
everyone know, Ruth Hambleton, who is our founder of Annie's Project, has been lurking in the background doing a little background research, and she found a short article on the use of precision data. And we've put that in the chat for you to review on your own. But I read it quickly, and it said that you need to make sure you use the precision data on both your planting side and your harvest side. That's a really critical and probably
Critical.
pretty obvious piece of
Absolutely.
that. So, Krish, I'll turn it over to you to ask any further or see if there are any further questions.
All right, thanks, Doris. Are there any questions? We're watching the chat, so if any of you have any lingering questions, feel free to put them in the chat or the Q&A. You can also see on the slide that Heather has provided her contact information. So if you have a question regarding any of her slides, this presentation, you'd like to reach out to her after tonight, feel free to do so. She'd be happy to answer your questions.
Absolutely. I know I think we had a question when we were taking the registrations about produce, keeping track of produce, right? So was there a great way to keep track of produce? And I don't know if we found anything, but we had a couple of resources that we were going to check into, right, Krisha?
That's correct, Heather. We had an inquiry into a record-keeping system for produce. And so we do have some contacts that are in that small vegetable horticulture area. So we're going to be reaching out to them and we'll get back to you with an answer. I also saw one more question in chat about how do you find a local crop insurance agent?
You should be able to go out to, I believe it's farmers.gov, and you should be able to search up local crop insurance agents, or go to riskmanagementagency.gov and search local crop insurance agents.
There is Ruth also volunteered in chat to ask your neighbors.
Absolutely.
They may work with someone, have worked with someone for many years that they think highly of, and
Mhm.
you share that information. I have another question in chat. What insurance product do you use to cover spray drift?
Spray drift is probably going to be covered on your liability policy. If you're That's a really hard one. That's a really, really tough one, actually. The only way spray drift would kick in on a multi-peril crop insurance policy is if your yield falls below the guarantee. But you need to have the adjusters involved from day one on that. I believe the ones that I have seen over my time they were covered by their farm liability policies, because it's either yourself as the operator spraying it, or somebody else, your neighbor, spraying that and drifting over onto your field. So it gets to be a very touchy situation.
Thanks, Heather. Doris has shared in chat that RMA has a agent locator as well, and so she shared the link in that. So can check the chat feature to see it. And here's some resources that could be really helpful to you. We have Farm Doc, it's with the University of Illinois. Fundamentals of Federal Crop Insurance. It's a really nice publication, a booklet that was put together. The University of Arkansas was the ones that headed it up, but there were other universities that were involved in putting it together. It's a really great resource. The Crop Insurance Basics, you can get that information at the Risk Management Agency, USDA, the Center for Farm Financial Management, and of course, University of Minnesota Extension. And the Center for Farm Financial Management is affiliated with University of Minnesota. So you could just apologize, we didn't get the link for that, but if you just Google the Center for Farm Financial Management, it will pop up quickly. With that, is there any other questions? I see Doris is putting some different links into the chat feature. Seeing none, thank you all again for joining us tonight for our first in this webinar series. We hope that you look at the other topics that will be coming up in the next few weeks and come back and join us again. So with that, thank you all and hope you have a great night.